Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Everybody, this is the Digital Asset Investor. I wanted to today I was going to go over a couple of interesting pieces of news, and then I wanted to speak with you about a bigger picture item that I had touched on the other day. Yesterday, there was a few decent pieces of news, and a couple of them I'm going to show you today. To be honest, I was not really inspired yesterday, but I'm inspired today. And so I don't like to do videos when I don't feel like I'm in the kind of mind frame to really get across to you my enthusiasm for things. And even though yesterday was the first really up day in a while, I was not, I just wasn't in that frame of mind. But anyhow, so today, first I wanted to go over a piece of news that is news from yesterday, which is this Mercury FX. They announced some of their testing of XRP, and these guys, and Ripple's doing what I think is the smart thing. They're letting their customers do the talking for them now, and the words that Mercury FX uses is just amazing, and it's really and it's right in line with everything that Ripple has ever said, and that we've been saying. Mercury is delighted with the incredible speed and the cost efficiency of the XRP pilot phase, and is excited about a production rollout in the near future. So you've got the company saying they're fixing to go into production, okay? And so for all of those people out there who have been saying that XRP will never be used, get ready. It's going to be fun watching you backtrack. I hope that all the naysayers will be the first ones on Twitter saying that they were wrong. We'll see. But this is really the coolest thing that these guys said. They said the exchange rates were very competitive. And then he says, and the guy that's speaking here is Constance, I believe, Alistair. He's the founder of Mercury FX. The exchange rates were very competitive, he said, and he's talking to Forbes, and he says the transaction times were unbelievable. So I think that says that pretty much speaks for itself. And notice in the news and from various sources, whether it's people that used to be naysayers or people who have been on board with XRP and Ripple from the beginning, you sure are hearing a lot about that speed these days, aren't you? And it's an undeniable thing at this point. And so I thought that was worthy of mention. Interestingly, Mercury FX, the exact same day, comes out with their news that they will be testing payments into China and Mexico with Ripple, and we're most excited about the potential to bring currently unconnected markets into the fast lane of global finance. So right after they mentioned the unbelievable speed of XRP, not of XCurrent, the unbelievable speed of XRP, all of a sudden they're talking about bringing the unconnected market into the fast lane of global finance. Go figure. All right, that was worth mentioning for sure. And now, speaking of speed, if you remember a few days ago or last week, at C3_Nick had started the movement with trying to get Binance to make XRP one of the base pairs. And then this tweet came out yesterday. You remember Michael Arrington owns Arrington XRP Capital. Okay, so he's the first guy that started his own hedge fund with XRP as the currency that moves all the money because he knows it's the fastest. Well, Michael Arrington's he tweeted this picture. I think I'm saying that right. Liechtenstein is where he is. I believe they're having a blockchain conference or something there. But anyway, he posts this picture outside of his window, and then the guy that started Binance posted this, and he says, LOL, if I posted this photo, my own photo, probably just a couple of hours apart from yours, is it too much of a coincidence and revealed too much, question mark. So, in other words, he's with Michael Arrington out there. And so that got everybody buzzing, and C3 Nick actually replied and asked him if he's talked to the guy about the XRP petition. So obviously, if the Binance guy that runs Binance is this close to XRP, you know, like we've said all along, it's just a matter of time. Just like I've said all along, it's just a matter of time before people and then ultimately investors are led to XRP, because it's the best digital asset ever created, and everyone eventually is led to that conclusion, which is why you as an XRP investor are going to make a mint. Okay, this is just a little piece of news, but it's a huge piece of news that I wanted to make sure I went over, because I saw this article this morning. Remember, South Korea and Asia in general, all the way through December, these have been the markets that have fueled the mega bull runs. They fueled the 38,000% return in Ripple last year more than anybody else. South Korea specifically. And if you remember, the government coming down on cryptocurrencies in South Korea was a big part of the reason that bull market became the bear market that we're in right now. And so they decided that they were going to spend the next few months getting their regulation in order. Well, this article is all about how South Korea is just now getting their regulations in order, and they're about to pass the regulations that make this market more stable, and it will cause their population to flood right back in. Because one of the things that they're going to require in this article that I read is that their people's and crypto investors' deposits are insured, and that's just going to help our market more and more. But this is huge, and this is happening around the world right now, but this is the first one I saw in South Korea. Okay, now this is a fascinating article that I haven't seen anyone cover yet. They may have, but I haven't seen it. But this guy makes a really, really good point. How next generation crypto investors are poised to win, even if their startups lose. Okay, and this is Jamie Burke, and he runs Outlier Ventures, so he's a venture capital fund. And in this article, he made a statement, and I had to read it once I saw this. He says Andreessen isn't going to be the Andreessen of crypto. And what his point, if you read through this article, is that Mark Andreessen, who was the founder of Netscape, his point is that he doesn't believe that Mark Andreessen is going to make the kind of money that he did in the .com bubble. And what he's getting at is Mark Andreessen is going about it the wrong way. Mark Andreessen is investing as venture capitalists and investors traditionally did, which is to invest in the equity stakes of companies and buying stocks and equity in companies. And what the whole point of what this guy is saying is that investing in the digital assets behind these companies is better. And I'm going to explain to you what he says the reason why is, and he's right. If you go down to this section right here, the advantage of a token sale, and his fund has backed IOTA with a 7-figure sum. Okay, and he goes on to say, he says IOTA, and he's speaking about IOTA, the company behind IOTA right now. IOTA has many problems, largely around their communications. But we believe in the vision and we believe in the innovation, Burke told Forbes. And here's where it gets interesting. And what he's about to talk about is the difference. There's a difference between owning IOTA, the digital asset, and backing the actual people that are running IOTA, the company, or having an equity stake in the company that is right now focused on IOTA. He says whether they will or won't be the ones that will fully realize the vision is impossible to say, but we remain long-term investors. because the IOTA protocol is partially open sourced, his commitment remains as even if the foundation falls apart or is unsuccessful, Burke's hope is that another group could always pick up the project and continue developing it. When you're investing in an equity-based startups, inevitably 90% fail, and all that know-how, IP, experience, and development is lost forever. In the kind of protocol investing that Outlier and his peers are doing, the value of their holdings has the potential to rise infinitely, long after the protocol's creator has vanished, much in the same way that the value of Bitcoin has grown exponentially since its creator, Satoshi Nakamoto, disappeared. So, what his point in all of this is that since this is an open protocol, just like XRP, they have a developer site. If Ripple's gone tomorrow, XRP is still there. It's still the fastest digital asset. Developers can still develop on it, just like Casino Coin is doing. Companies can still be formed around the XRP ecosystem, and that is why this is so huge. Ripple disappears tomorrow, even though we love Ripple and we love the utility that Ripple is going after, which is the banking system and the movement of money around the world, which is one of the largest use cases that could be gone after. Even though, let's say we were an equity investor in Ripple, well, let's say Ripple goes out of business tomorrow, we've lost everything. As XRP holders, that's not the case. And because of the nature of digital assets and the things that I've told you before, XRP can go up at levels that can't be imagined. And the main reasons I've given you for that is A, this is a new asset class, and I've shown you the formation of that asset class, that Wall Street and institutional investors are building an entire infrastructure around. The fact that it's got utility. Equities will never have utility. There's never going to be money flowing through equities the way that it's flowing through digital assets, whether it's the creation of a new company like Casino Coin or another company like what Coil's doing right now to monetize web advertising. And then the third thing I've told you, which is the reason that these digital assets are going to go crazy versus if you owned equity, is the destruction that has been going on by governments nationwide. And I'm about to talk about this more because I can't say it enough. This is the biggest part of all of this. The destruction, the debts that the countries of the world have put their citizens in by borrowing more money than they had, and thus printing money out the wazoo to try to carry that burden and destroying the currencies of the world. And I'm about to really go into that because that's the big one, in my opinion. These other things are huge. Don't get me wrong. Each one of them is huge in their own merit. But the destruction of savings, destruction of money by governments that's been going on for over 50, really since the beginning of fiat currency, the destruction that has been going on, it has never been at more of a tipping point, in my opinion, than right now. And the creation of digital assets was no coincidence. It was created to combat that, okay? And it has properties that traditional investments that combat that, like gold and silver, do not have. And don't get me wrong, gold and silver, and I'll go over that in 1 second. I didn't mean to jump to that tangent yet, but this guy made a really good point, so I wanted to cover that. Now I'm going to jump into it. This article I'm about to show you, okay, this relates back to the Turkey crisis that I mentioned the other day. Let me get a sip of coffee here. This relates back to that Turkey crisis from the other day that I mentioned to you. And that's Turkey, their currency has been plummeting, and it's the same, it's related to politics, but it's really the core issue when you break it all down. It'll be the core issue for many countries, probably as a result of this causing the beginning of a debt crisis. But this article is about, in Russia's footsteps, Turkey dumps U.S. sovereign debt. as political rift deepens. So they've gotten into it with Trump, and in response to it, they're dumping the debt that the U.S. Treasuries that they own. And in the article, they're talking about how this is the same thing that Russia has done recently. Now, if you're a U.S. citizen, this should terrify you. And the word is terrify you. It should terrify you, because this is the end game. This is what happens this is the ultimate destination when you have currencies and the gold standard is removed and the currencies are not tied to anything. They are eventually destroyed. And if you don't own something that goes up when those currencies are destroyed, you get destroyed financially. And there aren't many things that go up when your country's currency go down. But there are 2 or 3. Gold, precious metals is 1, gold and silver being 1 and 2. And digital assets, in my opinion, are going to be even more. I think digital assets are going to do even better than gold and silver. They already are as a result of all this. As we go along, saw this article too the other day. Actually, this was today. Japan's holdings of U.S. debt drop. And this is about Japan unloading U.S. treasuries. More scary, terrifying. China's $1.2 trillion weapon that could be used as a trade war with the U.S. If you don't think China has tons of leverage against the United States, think again. This is dangerous, because I think China owns more of it than anybody. All right, check this out. This is now keep in mind, this will shock you in itself. It says, who does the U.S. government owe money to? $17.6 trillion in federal debt as of March 2014. This is scary enough right here. 2014, today, $21.3 trillion. Foreign investors own 34% of all of that debt. This is as of 2014. No telling what this is now, but they own 34%, and we are now the entire world, the United States and the entire world has kept interest rates at 0 since the financial crisis, and they've kept them at almost 0 for all this time. And they've done it for one reason, because they knew if they ever raised these interest rates, it would show you the real weakness of the global economy. And the second that they're in a position where they have no choice, as I told you the other day, we're entering an inflationary period, because I can feel it when I go to take my family to dinner. The second that they're in a position where they have no choice but to raise interest rates to combat inflation, all of the shit's going to hit the fan, okay? And you're going to own one of the greatest assets in history to protect you from the shit storm that they've created, okay? So I'm going to go and I want to show you, okay, I showed you that. I wanted to make this point again because I talked the other day about the guy that wrote Rich Dad, Poor Dad, and this was the article I showed you. And I didn't think anybody had ever put it better than this guy did. He called he called virtual currencies the people's money, and he called gold and silver God's money. And I think he's 100% right on. From the beginning of time, gold and silver have really been the only responsible investment. They've really been the only thing that held any real value. Equities and fiat money and all these are creations of men. Gold and silver has been around since the Bible and before Jesus. I mean, gold, silver, and digital assets. I love how he called it the people's money. And the reason he called it the people's money is because the design of digital assets, they were designed to be deflationary. In other words, they were designed so that once created, no more could be created. Okay. They were designed that, and not only that, but they're deflationary. So as in the case of Ripple or XRP, some of it gets burned after every transaction. And so not only is there not going to be more XRP, there's going to be less and less over time. And that's not a tremendous amount less and less, but it's less and less over time. And with population growth, more people, the same or a little bit less XRP. How does that work? If XRP has real utility and it is the fastest digital asset in the world, the way that works is as people see it as being fast and useful. I mean, it's got the thing that even gold and silver don't have. It's got the movability, the ability to move it, to put it on a Ledger Nano S and take it with you. It's even got something that gold and silver never have had. Try crossing the border with $1 million in gold. You won't have that gold anymore. So I tell you all that to tell you the story, okay? And this, a lot of the older people in this audience have not heard this story, and this is for you too. And I hope that I don't bore you with this, but I'm about to read you a story, and it's about the Weimar Republic. And for those of you that are older, you've probably heard the story, but if you haven't, you listen to every word, because that's where we are in this world. Listen to every single word. And if you're young people out there, this might be one of the most important financial stories that you ever hear in your life, because the story of the Weimar Republic is the defining story of, in your life, what is really going to have value. Okay? I mean, I'll just use as an example, the most valuable things in your life are the things that can't be replaced. Okay? Your family, your kids, your wife, the things in your life that can't be replaced. Those are the things that are the most important to you. Is the things you cannot replace. If you have $1 on your desk, you can easily go replace that $1. That's no big deal. But the things that can't be replaced, those tend to hold more value. But what I'm going to tell you, I'm fixing to read you this story, and I want to tell you what this story is from. This is from a book. It's called Guide to Investing in Gold and Silver. Protect Your Financial Future. My dad gave me this book a while ago. When they're speaking in this book, they're speaking in terms of gold and silver. But I'm here to tell you that the lessons here, even more so, I believe, are going to apply to digital assets, and not all digital assets. I think many of the digital assets that they call assets aren't assets at all. They're going to go to zero. But the digital assets that hold real value and have real utility, I believe, are going to dwarf gold and silver when what the governments of the world have done to ruin our economies is exposed for what it is. And I think we're on the very verge of that. So I'm going to read to you about what happened in the Weimar Republic. And I hope that you will really let this sink in, because this is scary. And this history repeats itself, and if you don't study history, you're out of your mind, especially when it comes to your finances. The Weimar Republic, a painful lesson learned. At the beginning of World War I, Germany went off the gold standard and suspended the right of its citizens to redeem their own currency, the mark, for gold and silver. Like all wars, World War I was a war of and by the printing press. The number of marks in circulation in Germany quadrupled during the war. Prices, however, had not kept up with inflation of the currency supply. So the effects of this inflation were not felt. The reason for this peculiar phenomenon was because in times of uncertainty, people tend to save every penny. World War I was definitely a time of uncertainty. So even though the German government was pumping tons of currency into the system, no one was spending it yet. But by the war's end, confidence flooded back along with the currency that had been on the sidelines, and the ravaging effects worked their way through the country as prices rose to catch up with the previous monetary inflation. Just before the end of the war, the exchange rate between gold and the mark was about 100 marks per ounce. But by 1920, it was fluctuating between 1,000 and 2,000 marks per ounce. Retail prices shortly followed suit, rising by 10 to 20 times. Anyone who still had the savings they had accumulated during the war was bewildered when they found it could only buy 10% or less of what it could just a year or two earlier. Then, all through the rest of 1920 and the first half of 1921, inflation slowed, and on the surface, the future was beginning to look a little brighter. The economy was recovering, business and industrial production was up, but now there were war reparations to pay. So the government never stopped printing currency. In the summer of 1921, prices started rising again, and by the end of July of 1922, prices had risen another 700%. This was the breaking point, and what broke was people's confidence in their economy and their currency. Having watched the purchasing power of their savings fall by 90% in 1919, they knew better this time around. They were smarter. They had been here before. All at once, the entire country's attitude towards currency changed. People knew that if they held on to their currency for any period of time, they'd get burned. The rising prices would wipe out their purchasing power. Suddenly, everybody started to spend their currency as soon as they got it. The currency became a hot potato, and no one wanted to hang on to it for a second. After the war, Germany made the first reparations payment to France with most of its gold and made up the balance with iron, coal, wood, and other materials. But it simply didn't have the resources to meet its second payment. France thought Germany was trying to weasel its way out of pay, so in January of 1923, France and Belgium invaded and occupied the Ruhr, the industrial heartland of Germany. I think I said that right. The invading troops took over the iron and steel factories, coal mines, and railways. In response, the German Weimar government adopted a policy of passive resistance and non-cooperation, paying the factory workers, all 2 million of them, not to work. This was the last nail in the German mark's coffin. Meanwhile, Germany put its printing presses into overdrive. According to the front page of the New York Times, February 9, 1923, Germany had 33 printing plants that were belching out 45 billion marks every day. By November, it was 500 quadrillion a day. Yes, that's a real number. The German public's confidence, however, was falling faster than the government could print the new currency. The government was caught in a downward economic spiral. A point of no return had been passed. No matter how many marks the government printed, the value fell quicker than the new currency could enter into circulation. So the government had no choice but to keep printing more and more and more. By late October and early November 1923, the German financial system was breaking down. A pair of shoes, and listen to this good, a pair of shoes that cost 12 marks before the war now cost 30 trillion marks. A loaf of bread went from a half a mark to 200 billion marks. A single egg went from 0.08 marks to 80 billion marks. Turning the page here. The German stock market went from 88 points at the end of the war to 26,890,000,000. But its purchasing value had fallen by more than 97%. Now I'm doing an aside here. That right there should sink in really good. For the last 10 years, while we've printed money and gone into $21 trillion in debt in the United States, our stock market has been going up like crazy. But it's all an illusion. It's an illusion that the stock market's been going up because the value of our money, even though you don't know it yet, has been getting killed. They'll tell you on CNBC that the dollar is this strong currency and all. No, not even close. Okay, I'm reading again here. Only gold and silver outpaced inflation. The price of gold had gone from around 100 marks to 87 trillion marks per ounce, an 87 trillion% increase in price. But it's not price, but value that matters. And the purchasing power of gold and silver had gone up exponentially. When Germany's hyperinflation finally came to an end on November 15th, 1923, the currency supply had grown from 29.2 billion marks at the beginning of 1919 to 497 quintillion marks, an increase of the currency supply of more than 17 billion times. The total value of the currency supply, however, had dropped 97.7% against gold. The poor were already poor before the crisis, and this is the part I want you all to listen to, because this is you. The poor were already poor before the crisis, so they were affected the least. The rich, at least the smart ones, got a whole lot richer, but it was the middle class that were the most hurt. Okay, in fact, it was all but obliterated. But there were a few exceptions. There were a few who had the right qualities and cunning to take advantage of the economic environment. They were the shrewd, adept, and nimble, but most of all adaptable. Those who could quickly adapt to a world they had never seen before. A world turned upside down prospered. It didn't matter what class they came from, poor or middle class. They could adapt and adapt well. They could become wealthy in a matter of months. At this time, an entire city block of commercial real estate in downtown Berlin could be purchased for just 25 ounces of gold, $500. The reason for this is that those who held their wealth in the form of currency became poorer and poorer, and they watched their purchasing power destroyed by the government. On the flip side, those who held their wealth in the form of gold, or in mine and your case in this go around, digital assets and gold and silver. The reason, I'm trying to find my place here. On the flip side, those who had held their wealth in the form of gold watched their purchasing power increase exponentially as they became wealthy by comparison. Here's the important lesson. During financial upheaval, a bubble popping, a market crash, a depression, or a currency crisis such as this one, wealth is not destroyed. It's merely transferred. During the Weimar hyperinflation, gold and silver didn't just win, but smashed their opponent into the ground by delivering yet another devastating knockout blow to the fiat currency. Thus, those who held on to real money instead of currency reaped the rewards many times over. I'm done reading now, but I'm going to reiterate this point to you. You are in a better position than the people that were holding gold and silver during the Weimar Republic, because you hold the new digital asset that's never been created, and you're sitting here in this perfect storm of government debt and government destruction of fiat currency, and at the same time you're primed for what's coming, which is a new asset class, Wall Street coming in, institutional money coming in, and on top of all of that, being in a digital asset that's going to have utility and move faster than anything around the world. You're in the right place at the right time, more so probably than anyone in the history of investing. And so let that sink in and replay what I just read to you, because it's unbelievable where you are in terms of financial opportunity. Okay, I wanted to show you guys, I didn't show you yesterday, this is from, in the link of my videos, you can go to my crypto store and you can get the, I didn't show you yesterday, I showed you some of the XRP stuff, but some of you are into Bitcoin and other things, and you can also buy other gear from with other digital currencies, and I just wanted to show you that. Also, I wanted to show you, I've never gone over for you, some of you that own a few other digital assets. There's a list on, this is the ledger, and I'll say it again, I always say it. Go if you want the safest way to hold your digital assets, those of you that are new to this and never have heard me, go to Ledger. You can go to, in the description of my video, you can go straight to ledgerwallet.com or Ledger, I don't know if that's the exact address, but anyway, it'll take you to their website. The link in the description of my video will take you straight there, and you can get a Ledger Nano S or a Ledger Blue, and it saves your digital assets safer than any other way. You can store it offline. But here's a shot from their website, and I wanted to show you this. These are some of the other digital assets that you can put on a Ledger wallet. It's not just Ripple. I've helped some of my friends and family set theirs up and put some of these other digital assets on there. But it holds most of the big ones. It's got Bitcoin and most of the big ones. I am not an investment advisor. I am the digital asset investor. So this is for entertainment purposes only. I want you guys to have a good day, and I will be back, and I'll try to do another video tomorrow if I'm inspired as I was today. Thank you for listening.